Hello guys, welcome to the Trading Parrot. What exactly is the CBBI index and how it can help you to forecast where is the top or the bottoms in the market in crypto? I know what you're probably thinking. We already have something like altcoin season index, or we have also the crypto fear and greed index to help us with that. Why do we need another index? And this index actually is not meant to replace the other ones. It's complementary. And I'm going to show you that with just a single picture here. In this chart, we see 10 years of Bitcoin. It's very accurately showing the two peaks. And only the final one, the actual peak of the whole cycle, is at 100% of confidence that it is the peak. Then later, years after, on 2017, with a confidence of 100%, it also spots by the dollar the top of Bitcoin. Of course, these things are normalized to actually match exactly those values, and we are expecting that same levels of this index is going to help us spot the next top. But before we start trusting this sort of index to be like the magic formula to take decisions, in this video, what we're going to do is we're going to learn how it works, because it's an aggregated indicator. It's an index that consists of an aggregation of multiple indicators. Many of them we might be already familiar. For example, I was already familiar with the top and bottom indicators that you can find in Glassnode. They're very useful as well. And many of them are already part of the set of indicators that they use in the aggregation in the index. So in this video, we're going to go over each one of them. We're going to explain how they work, how accurate they are by themselves, each individual one, to be able to spot the tops. We're going to look at how they are behaving as time goes by. During the 10 years of Bitcoin, some of them are becoming less accurate and they might need some sort of adjustment. But before you get disappointed, don't expect this index to be a tool for day trading. This thing is not going to tell you something like the orchestrator. This thing is not going to tell you that tomorrow we're going to have a drop of 10%. This is not the use for this. But in the past, from past performance of the indicator, you can see that is extremely good in the 10 years at telling you when is the best time ever to buy Bitcoin and when is the best time ever to get rid of Bitcoin. So you can buy it cheaper later. So this is phenomenal in that sense, but you cannot use it on a daily basis. For example, to day trade, swing trade, all those things, those are out of the scope of what this thing is offering you. Although this could help you, for example, or we are at a level of 77. Is this the right time to invest everything in Bitcoin on a confidence on 77 out of 100? Maybe not. What is a better time to buy Bitcoin? Well, according to this indicator, it's much better to buy it at a level of 10. At a level of 2, it will be magnificent entry if you could enter at that price at a time when Bitcoin was 3,000 here or 5,000 here, not just because of the price, but also because of the momentum, how bullish it turned right after that. And look at this one. Wouldn't you like to buy Bitcoin at $178, which is right the bottom after the collapse since $1,000 in 2013. That will be amazing. So definitely stay for the whole video because there's a lot of insights that I want to share with you from each individual indicator at the top here. And by the way, if you're wondering what's the value today, you can go here and it's showing at 60. If you want, you can subscribe on Twitter. There is a daily tweet here from their account and it's called CBBI_daily. And I'm surprised they don't have so many followers, but this thing is definitely something I have in my timeline on Twitter. Don't expect this thing to change that much day to day. So there's not a lot of changes. As you can see here in the chart, you can stay for a month or two within the same level, change just one. This thing is for the long term. Throughout a year, if you compare relative this timing to this timing, you can say, okay, 62 is not a great time to buy compared to this other time where it was 34. So relative, you could say this is twice as great time for buying than the other time. But if you get 60 and it goes suddenly to 59, that doesn't make much difference really in terms of whether to buy or sell. So the first thing that we're going to do to understand how this works is we're going to toggle all the indicators off. So I'm going to get my chart empty and I'm going to start with the first one. The first one is Bitcoin search term in Google. I've done this myself and you can see here how people are searching for Google. And you can see that it's very aligned. So when Bitcoin is pumping heavy, you get a lot of people searching for Bitcoin. But the same happens when Bitcoin collapses. And don't be biased. Look at this peak here. This peak, this line, which is the maximum this year, wasn't because of bullishness. We can zoom in. Let's look at here. Here is where Bitcoin collapsed in May, 55% down. And people started searching for Google. They were searching because they were thinking, what the hell is going on? Not because they were bullish on Bitcoin. This time here, people were searching because they were searching due to FOMO. And here, they're searching because of fear. What's going on? Now, throughout the year, the amount of searching volume has kind of decreased. If you can see here, it stays around 33, maximum 44, is far, far, far from the levels of 70, almost double or more than double than what we have in the beginning of the year. And what is the trend search of Google telling us? When we get over 80, over 90, there is a high likelihood that there will be a correction. There seems to be a correlation between the search for this term and what happens to the price of Bitcoin, as you can see in this chart. Oh, by the way, when you click here, it takes you straight to the indicator, and then you can see how is it composed, how is it done. And basically, they're just searching for Bitcoin, and you can see the last 5 years, at least here, and the maximums. Let's go to the next indicator, halving-to-peak days. Very interesting one. This is based on Bitcoin being on a 4-year cycle. The peak tends to happen around exactly the same time in every single cycle, although every cycle is becoming a little bit longer. So it's kind of stretching and stretching and stretching. You can see that this angle here is more pronounced, and then it's less pronounced, and then it's less pronounced. So they have done some compensation for that. And if we were to trust specifically this forecast, the halving-to-peak days, then that will be pointing something in the next 1 or 2 months. In fact, this is giving a confidence at the moment of 83%, the second highest of all these indicators in terms of forecasting that we are getting close to a peak. So this 60 is being pushed up by the higher numbers, of course, here, and it's pushed down by this one and the 50s that we can see here along with the reserve risk. The third one that we have here, this was a painful one in May. This is the pi cycle top indicator. We had a signal from this indicator around April, I think. And after we got that signal, people were thinking, okay, is the pi cycle top indicator again going to spot a top and the top of the whole market? And everybody was laughing because we were thinking that this cannot be the top. All the other indicators are telling us that there's a lot of room to keep going higher. Unfortunately, it happened what happened. So right after this, a few days after Bitcoin started correcting, right after Elon Musk was tweeting about taking payments in crypto on Tesla. So where are we now with the pi cycle at the moment? It's very low. It's actually 53%. So it's indicated we are halfway through to a top. And how is it calculated? It's just basically using MAs. And why is it called pi is due to the fact that if you divide these two MAs, the 350 with the 111, you get a number very close to pi, 3.142. So they literally took two very long moving averages and they try to match the number pi. It's not very surprising, really. So if I show you here, this is a lagging indicator. So whenever things are coming down already very heavily, you're going to get one of these events. So it's not forecasting necessarily. It's already confirming the mess that is just going to get worse. So you can see here, this is already correcting heavy. You get the dead cross here, and then it carries on going down. And then here as well. And what is different in this cycle is that we got this one, but then after the correction, which was very painful, we actually made another all-time high. So that is different from the previous cycles. Normally here, you get this as the event saying, we are done. We are entering bearish market. And well, it's very difficult to tell we enter now a bear market because right after the signal, we made another all-time high. So it's kind of invalidating at least the expected previous behavior that we had. The fourth one that we have here is also around the 55%. So it's halfway through saying that we are in the cycle still and we have a lot of room left to go higher. And it's called the 2-year moving average. As you can see here, it was confident twice, 100% in 2013, although the first one wasn't one. So this could well get to 100% again, and maybe that's not the top. There's another top in the same cycle, and both will be with 100%. In 2017, there was a single top. Actually, there's two, but they're very close together. And beginning of the year, the highest we went with this one was 86. And in the recent weeks, we have got to 64. Now we are at 55. Obviously, we are getting a small correction of 10%. The way you use this is as an investor tool, this indicator, actually. So you have the two long-time MAs in the same chart, and they call it the investor tool because if you are below the green one, it's a great opportunity to buy. If you're above, it's a great opportunity to sell. Although in the last cycle, we didn't enter that area of selling, just like we see in this chart here. And this one has a funny name. It's called Bitcoin Trololo Trend Line. At the moment, it's at 65% confidence that we are at the top. And it's got a good performance, actually, because it spot twice the peak of the cycle. In here, it got to 78, and it was a local top. just like we did in March. We got that to an 80. In the maximum we have done now more recently is 73, now sitting at 65. So there's still for this one a 35% room to go higher. In terms of buying the top, I find this interesting because it really goes to the very bottom here. So it's not necessarily telling you when it's best to buy, but it literally qualifies all this period as an accumulation or buying period. I never heard anybody calling it the trololo trend line, but I know it by Bitcoin Rainbow price chart, which is basically a logarithmic chart, and they use these colors to show the best times to buy or the best times to sell. In March, in April, when we were around 60, it was showing orange. So we were entering the overbought area, but still with a lot of room to go to the upside. At the moment, we are in between yellow and orange. And even though the prices are higher than here, we are not yet in full orange. And that's because of the nature of this chart, which is logarithmic. So if we move sideways, and if we stay at this price for a long period of time, we will start entering even green, even if the price remains the same. Now, this chart is very bullish, actually, because if you look at this and if you think, okay, what if we do another leg like this? These are the charts that are normally people using to say, well, if we get to the peak and we get to a red, we're going to get to 300K. If we do it later, we can get to 400K. If we do it even later, we can get to 500,000. That's most of the time where those speculations are coming from. This indicator has a very different nature to many of the other ones, and it's one of the only ones that actually in March was indicating a top already, although now it's not indicating one. It says that now we are far from the top. In March, it marked top. It said top even from when we were at 40K. It was very precise in 2017, and in 13 it got to 98 on the first peak, and on the second peak to 100. In terms of finding the bottom, it has been very, very, very good performing. So if you go to the time this indicator is at 0, is more or less the bottom in the middle of the bear market, and the same here in 2019. Very good entry. This indicator is actually called the relative unrealized profit and loss. So what it does is, based on the market cap, it calculates the unrealized market cap, and then it divides that by the market cap to get the relative amount. How much volume is held in unrealized profit, and why this can forecast a top. The more funds that are held in unrealized profit, the more people can actually take it away and try to cash in profits, and then they can make the whole thing collapse. So literally here, when you're at the top, there's a lot of people with unrealized profits ready to cash in. And the first one that starts the snowball effect is, the most intelligent one that decides to sell at 20K. And then these people here, they were in profit. And if they didn't sell, of course, they are in a very bad position after that. When you are in negative numbers of realized profit, usually it tends to be consistent with times where the price starts moving up. Those are very good buying opportunities. Everybody is at a loss. Perfect for buying. We had one of those exactly when COVID-19 started. That was, some people call it the opportunity of a lifetime, what happened at that point. And I fully agree. In the worst times, after the sellout of May, it got to 36%, so still not negative. Here it's showing 65%, and this thing can go over to 77, but still in the chart where things are normalized is showing at 87. So in regards to all the indicators and indexes that are being used here to try to spot the top, this is the one that has more confidence that we are at the top. Many of them are below 60, below 50, but this one has an 87% confidence that is at a top. The next one is the PUL multiple, very good accuracy. So we got, again, 100% confidence here and here. This is a false positive, it's 100% confidence, but it wasn't the top. And in the current cycle, it got to a maximum of 89 confidence, and more recently 68. At the moment, it's halfway through. In particular, this one looks into the supply side of the Bitcoin's economy, Bitcoin miners and their revenue. This one is calculated by dividing the daily issuance value of Bitcoin in dollars by the yearly moving average of daily issuance value. It says that in this area, the value of Bitcoin is too good to ignore it from the perspective of the mining, and this area here is too overpriced to keep holding it. This is one of those indicators that the value is diminishing with time. As you can see, you can almost draw a line here trying to spot all the tops. And definitely, we shouldn't expect, at least from this indicator, that to suddenly get over the period that we already have in 2011. I think it will be great, actually, with this indicator to normalize it, to factor in its diminishing nature. MVRV or Z-score is one of the ones I find more difficult to explain, actually. It uses blockchain analysis to identify periods where Bitcoin is extremely over or undervalued relative to its fair price. It uses the market value and the realized value. Again, these ones, you can find them on Glassnode as well. At the moment, it's at 71%. It was very accurate. Both last peaks, they were at 100%. The first peak got to 97. In May, it got again to 97. Interestingly, people tend to compare the 2013 cycle with the current cycle. And in that sense, our first peak is also at 97. So in theory, the next peak could get to 100. I can see that on 2017, there's a double peak as well for the indicator. It seems very precise as well for spotting bottoms in 2015 and in 2019. The RUPL is at 70%, so it's pretty high at this time. It's been extremely accurate for spotting tops, and which seems to be still 30% ahead of our next top from the perspective of RUPL. RUPL means realized hodling, and it's the ratio between the realized hodling of 1 week versus the realized hodling of 1 to 2 years multiplied by the total market age. And the idea behind this indicator is if the proportion of people hodling for a very short period is larger than the people that have been hodling for very long, excluding the dead wallets or the wallets that are lost and stuff like that, then it means that those funds are in weak hands and ready to be dumped. So we don't want the weak hands to hold Bitcoin because they can dump on us. Whereas if there's a majority of people hodling for a long time, that gives us more safety. So when we are around here, it means that the majority of the people are holding for very long. So relative to the whole market cap, many people here are holding for a long time. As we move up, the retails and the speculators, they start buying more and more and more. That ratio starts growing towards the short-time holders. And hence, the risk starts growing with it. So on each cycle, right before the peak, those retail investors, they start accumulating and speculating, and eventually it gets to a maximum. Most of the people are holding for just 1 week. They are just entering, they're new to the game, they just want to make a quick cash. And when the proportion of them is too large, the thing is ready to dump. So how are we in terms of RUPL ratio right now? So you can see that it's been growing from 2019 in almost like a constant growth here in terms of ratio. This doesn't necessarily mean that long holders are stepping down. There can be new ones of them, but it's just that the amount of short-term holders is growing faster relative to the long-term ones. Reserve risk. This one has been very accurate. It gets to 100 both peaks, but it's also spotting a peak here in the first peak of 2013. Interestingly, this year is actually at 63 only on the first peak. It's not forecasting it as a local peak or as a first peak. In terms of bottoms, it's very good, pretty good. The reserve risk is calculated as the Bitcoin price divided by the HODL bank. Reserve risk allows us to visualize the confidence amongst long-term Bitcoin holders relative to the price of Bitcoin at the given moment in time. At this time, it's at 35%. Very interesting. That is not as high as I would expect it will be. And the last one, these are all indicators that they belong to willy. And apparently, they have decided to use the top cap and the CVDD. Very accurate for the top. It gets to 100% exactly on those tops. On the first peak, 98. Again, not very high around here, 77. Not surprised, willy wasn't calling this a top either when he's sending the analysis. We got to levels of 62 maximum in the short term, and now we are sitting at 54, 55. Very good for spotting bottoms as well, at 0 in 2015, at the price of 178. Confidence 1 here at 3,000, and in COVID 4, $5,000. Very accurate, very good entries. You're going to be surprised how simple is the top cap. It's the average cap multiplied by 35. Historically, it has matched market tops, just like that, 35. So if you put that here, you can see the tops. The green line is right following all the tops. And in the current cycle, we still seem to be far away from the top. The other one that is being used is CVDD, which is tagged as experimental by willy. It stands for Cumulative Value Days Destroyed. It has historically peaked the bottom of the market. When coins pass from old investors to new investors, the transaction carries a USD value and also destroys an amount of HODL time by the previous holder. CBDD is the cumulative sum of this value time destruction as a ratio to the age of the market and dividend by 6 million as a calibration factor. I hope that makes sense, but this is this one here, the one in pink or purple, depending on how you see it. But as you can see, it's very good for spotting bottoms, very close to the bottom here. Guys, as you can see, most of these indicators are based on on-chain data analysis, combined with the price many times, with the market cap as well. moving averages of the price. There's a whole selection from different sources of data, but all together, in my opinion, are stronger. And as you can see here, they can almost follow the price in terms of tagging it as a bottom or as a top, which is exactly what could help us to determine when is a good or a bad time relative to different times. Definitely consider keeping an eye on this index as well. Do not use it for daily trading because it won't really help at all. But potentially, seeing a very low value could be a great entry in the future. Not financial advice at all, but it seems as a collection of different indicators to work pretty well. Let me know in the comments if you ever heard about this index or whether you've been using it already. Maybe every 4 years you're waiting for this CBBI and you've been accumulating like a whale and selling the tops as well, and you've been doing great. Personally, I'm going to use it as a way to see how risky is the market. Of course, if we are at a level of 60 and then later on we start getting to 80, 90, is something to take in consideration when you start thinking, oh, I'm going to add a little bit more to my position on Bitcoin. Of course, people are going to tell you add more to your position of Bitcoin at all times on YouTube. But this, if you have no clue when to enter, when to exit, potentially can become part of your toolset as well to time a little bit better your entries. The authors are actually stating that it does not predict prices nor dates. So it shouldn't be used as that. It's just another very powerful tool to use in combination with other things. Guys, I hope you found this information valuable. I really enjoy looking into all the details of all the indicators. If you enjoy the content, please consider subscribing, hitting the notification bell, leaving a like, and of course, the best thing you can do, leave a comment. It doesn't matter what you write, just leave a comment. I will really appreciate it because that really helps the channel to grow. Thank you so much. I'll see you in the next one. Bye-bye.